Hello and welcome to the weekly roundup for Friday the 20th of November. We hope that you're enjoying these weekly roundups, and please don't forget to subscribe to receive regular stock market content. Also, if you've got any questions, pop them in the comments box below. We would love to hear from you. And finally, we invite you to follow our market sector reports on tech stocks, banking stocks, even IPOs using the link in the box below. This week it's been a mixed week for European markets. We've had on the one hand the sort of positivity and optimism from vaccine development, but that comes against a sort of negativity on surging COVID cases, tightening lockdown restrictions and fears over the economic impact that is going to have, at least in the near term. So as far as vaccine developments are concerned, we had Moderna announce that their vaccine candidate for COVID-19 was 95% effective. Pfizer have updated, saying their final results show that theirs was also 95% effective. AstraZeneca have also told us that their phase 2 trials have showed that their vaccine candidate produced a robust immune response in adults, particularly older adults. So that's some really positive news as far as vaccine is concerned. However, the reality is that vaccines aren't going to be widely available until spring next year. In the meantime, we've got to get through a very difficult winter. Now, COVID cases are surging in Europe and also in the US. Now, we've seen in the US that they're starting to tighten lockdown restrictions again, which has really unnerved the market. So as we can see, we've got those two forces playing off each other, a sort of a balancing act, and that means that we've seen sort of actually a fairly flat week as far as the markets are concerned, with the FTSE looking to end the week 1% higher, the DAX around 0.5% higher, whereas the S&P is trading flat. As far as oil is concerned, oil is actually just looking to end the week slightly higher, which is fairly interesting considering near-term concerns over the outlook. As far as Brexit is concerned, Brexit is of course on our radar, and at the beginning of the week we had unofficial reports that a Brexit trade deal could be announced as soon as Monday or Tuesday next week. Now that was never confirmed, and since then headlines have been more mixed, so there still isn't any clarity as to whether we're going to be getting that Brexit trade deal, and there's still just now 6 weeks to go until the end of the transition period, so the pressure is definitely on. The pound is looking fairly solid. It's trading at around comfortably over 132.50, targeting 133. So at those levels, pound traders seem fairly optimistic that some sort of trade deal could get achieved. As far as single stocks are concerned, we've got a large faller today, in fact, is Sage. Now, not only did they report an 8.5% increase in recurring revenue and an increase in the dividend, there are concerns growing about declining profit margins going forward, and that's unnerved investors who have jumped out of that stock pretty quick today. On the plus side, we've got Royal Mail. They're up 8% across the week after reporting some impressive first half sales. Now, first half results, their revenues increased in the first 6 months 9.8%. They've crossed this really important threshold whereby parcels have actually overtaken letter delivery. So declining letter volumes have been a concern for Royal Mail for the past few years, but with this sharp increase in online shopping, Royal Mail has been an unexpected winner from the COVID pandemic. Also performed well this week is Halfords, which has traded up 11% across the week. Now, they reported a 10% increase in pre-tax profits and also a doubling in revenue. Now, this is thanks to an uptick in cycling and also thriving performance at their auto centres. Just to remind you, if you do have any questions, please pop them in the comments box below, and don't forget to subscribe. Thanks very much and have a lovely weekend.